on Business Incorporated today. We'll take a look at the Arise Ghana protest and the spillover impact. Cameroon to unlock $73.6 million from IMF. British High Commission speaks on investment in Nigeria. It's the Thursday edition of Business Incorporated here on Channels Television. Thank you so much for joining us. I'm Ini John Mekwa. Let's start as usual with markets. Starting here in Africa, the NGX is down marginally. That's continuing with the sentiments of yesterday. Maybe the bulls can flip that before the close of trade. We look forward to that. But the JSE index is deeper in the red, down over 1.5%. In North Africa, the EJX 30 is the lone gainer. It was up 0.5%. While Kenya came up a big move yesterday. It was up more than 4%. We do hope that market will find its way back up. At this time, it is the third worst performing market on the continent. Then we move to the Middle East now, where it's all red across the market. In the UAE, the Abu Dhabi index is down 0.35%. So also the Dubai index over 0.5%. In other regions, the Saudi Arabia index and Qatari are both down 0.98% and 0.37%, respectively. Well, let's leave Africa now. We'll go to Europe, where it looks like an era of low inflation among the world's top economies is coming to an end, or not. Well, that's the message from European Central Bank President Christine Lagarde during a policy forum with central bankers from the United States and England. Lagarde says that the short-term shocks from the pandemic and the war in Ukraine are leading into new dynamics across the world economy. We have Stephen Bursley now joining us from Germany to tell us some of the reactions to this. Hi, Stephen. Good afternoon. So does this mean that Europe is heading back to higher prices long term?
Not necessarily. What it means is that there is likely to be more inflationary pressures in the future. Let's keep in mind that over the past few years in many Western societies, Western economies, there's been actually low inflation, unusually low inflation. And economists have been trying to figure out what's been behind it. And they've come up with a number of suspects, including aging populations, that's one, and then globalization and its nature of smoothing over economic frictions. Now, recently we've seen that trend change. There have been a couple of shocks, and we know them well. One is the pandemic itself, which has changed supply chains, it's changed labor pools. And then the economic recoveries have forced something of a whiplash effect going the opposite direction. And then, of course, the war in Ukraine has hit energy prices especially hard, commodities as well, and it's also had an effect on supply chains. What Lagarde is saying essentially is that these shocks could themselves lead to long-term changes in the dynamic that we're seeing when it comes to inflation. Basically that they're changing the underlying risk assessment that many countries are making about globalization, for example, or companies, I should say, as they try and decide where to put their suppliers and as they take a new look at how things such as just-in-time processing can actually be disrupted and affect their businesses in a major way. Also, she said that as we look forward and we consider the striving towards a carbon-neutral economy, global economies in the future, that could also bring up inflationary pressures as well.
Well, you talked about the war, which is like the most talked about conversation at this time. How much role does the Ukraine war have to play in this?
Right. So again, the war in Ukraine is something that's both been a shock, but it could also lead to long-term change. And this is exactly what Lagarde is getting at. If we look first and foremost, it's been a shock in the sense that it's driven up energy prices in a massive way. Oil, natural gas, coal, all of these have been affected, especially in Europe, where Russia was the major exporter, one of the major exporters of fossil fuels to the continent, if not the major for countries such as Germany. So there is a immediate supply shock that's been the main driver of inflation for much of the EU. On the long term, however, it's also raised questions for many businesses about the sustainability of their connections with Russia and with Ukraine as well. It is a nation at war right now. So it's disrupting supply chains, and it's also making businesses realize that their investments are more than just bang for buck. They could be disrupted in the long term. They could be forced to pull out of some of these countries. And so the sort of the organic nature of globalization that says go where it's cheapest is being affected by this in the same way that COVID threw out the same questions. You know, areas such as China, which offered the cheapest, most efficient bang for your buck for investment for many producers in the West, there have been some real head scratchers in recent months and some second thoughts about, is this the right place to put all of our investment? Should we not diversify a bit more? Should we not create redundancies in our own nation just in case they get cut off for whatever geopolitical or for health reasons of a pandemic? So these are the kinds of thinking that's going on in businesses right now, and that's what Lagarde is really pointing at.
And what would you say for investors? What would you say are the major takeaway from the forum?
Right, in the near term, probably not so much. One of the big questions is really what the ECB is going to do in its July meeting about interest rates. We know that they're going to raise them. That's what they've said already. The question is how much. And so with this policy forum, there wasn't any more insight into that. So investors haven't really made anything out of it in that sense. But what it does do is it underlines the long-term changes that are happening right now, the middle to long-term changes in thinking amongst central bankers. And it also raises, or it adds to the fears, I should say, over recession. Jerome Powell once again saying that to get things right in the U.S., to curb inflation, that a recession might be a consequence of that. And so it adds to the fears that we've seen in markets in recent days that a recession is on the way. And that's in fact driven markets over the past 2 days and generally over this quarter. And it's likely to do so in the weeks ahead. Of course, one of the bright spots had been China coming back somewhat with its economy. And by that I mean that signals that it's going to reduce some of its COVID restrictions and that the Chinese economy might be allowed to run a little bit more loosely than it had been in the past few weeks, but still that is outweighed by fears of recession.
Well, thank you so much, Stephen. Well, I guess recession, stagflation, those are the buzzwords globally at this time, unfortunately. Thank you so much, Stephen, and enjoy the rest of your day. Well, talking about Chinese markets rose on Thursday as government data showed factory activity grew in June, but most other Asia-Pacific indexes fell. The Shenzhen component jumped more than 2% earlier in the session, but gave up some of those gains to rise 1.5% to close at 12,896.2, and the Shanghai Composite advanced more than 1%. The Hong Kong Hang Seng Index declined 0.57% in the final hour of trade, and the Hang Seng Tech Index fell 1.46%. Shares of artificial intelligence software company Assess Time plunged as much as 50.5% after a 6-month lockup period for some of its shares ended. The stock was last 47.79% lower in the late afternoon. The Nikkei 225 in Japan dropped 1.54% to close at 26,393.04, while the Topix slipped 1.2% to 1,870.82. In Australia, the S&P AX 200 fell 1.97% to 6,568.1. South Korea's Kospi declined almost 2% to 2,332.64, while the Kazakh was 2.22% lower at 745. MCSI's Broadex Index of Asia-Pacific shares was down more than 1%. U.S. stock index futures declined in early trading as the S&P 500 prepares to wrap its worst first half in decades. Futures contracts tied to the Dow Jones Industrial Average shed 1.2%, S&P 500 futures slipped 1.5%, and Nasdaq 100 futures pulled back 1.9%. Those losses came after the home furnishings company RH issued a profit warning for the full year. Sweden Central Bank became the latest to hike rate. RH shares slipped more than 5% in the pre-market. Investors are also looking ahead to the release of new inflation data, with the core personal consumption expenditures set to come out, and Federal Reserve's preferred measure of inflation, and it's expected to show a year-over-year increase of almost 0.5% for May. Oil prices now edge lower in volatile trading as the market weighed concerns of global supply and a build-up in U.S. fuel products inventories. Brent crude futures for September, the more active traded contracts were down 40 cents to $112.05 a barrel. The August contract, which expires tomorrow, was at $115.63 a barrel. U.S. West Texas Intermediate crude futures fell 73 cents to $109.06. Crude inventories fell by 2.8 million barrels in the week to June 24th, thus far exceeding analysts' expectations for a 569,000 barrel drop. U.S. Energy Information Administration data show that though U.S. gasoline and distillate stockpiles climbed, fuel stocks rose as refiners ramped up activity, operating at 95% of capacity, and that's the highest this time of the year in 4 years. But further disruptions to supply limited price declines. In the metals market, gold fell today and was bound for its worst quarter in 5 as the dollar's strength and a hawkish rhetoric from central banks eroded the appeal of the non-yielding asset. Spot gold fell 0.4% to 1,809.90 per ounce, and it's en route to post a more than 6% fall for the quarter and a third straight monthly fall. U.S. gold futures dipped 0.4% to 1,810.70. Bringing down high inflation around the world will be painful and could even crash growth, but it must be done quickly to prevent a rapid price growth from becoming entrenched. The World's top central bank chief said that when they gathered at the ECB's annual conference in Portugal, normally gold tends to do well in times of high inflation, but investors will be worried about parking their capital in something that doesn't yield anything. And with the Russian invasion of Ukraine, nations are beginning to seek alternatives to commodities that used to be exported from both countries. To that effect, the British High Commission has held a press parley to brief Nigerians on the importance of agricultural investment as the Commonwealth Development Commission, now known as the British International Investment, speaks on various investment development projects in Nigeria and Africa as a whole.
Important partner for the UK government because it's only through bringing our set of tools together that we can take advantage of the huge opportunities that investment provides in a country like Nigeria, but critically investments that deliver development benefit. We're not just looking for any investments, we're looking for benefits, development benefits to the country and to individuals. Very crucial issue. As we know, we're facing huge challenges around fertilizer following the Russian invasion of Ukraine. So we're delighted that BII have set up an office here, headed by Benson. And just to kind of explain how our government sees the importance of this, we've just published our new Interventional Development Strategy, and there are 4 objectives in there. And the first one is around creating an honest alternative, essentially, to Chinese investment. We all heard of the Belt and Road Initiative. What we're looking at is a better quality investment, what we call honest infrastructure, particularly focused on public goods like climate change, energy security, and so on. So we don't want countries to be saddled with debt. We want countries to be benefiting from good infrastructure that is high quality, that is well maintained, and that's what the UK is trying to offer, working in partnership with British International Investment, also our UK Export Finance company, and bringing together the kind of expertise we have from our development perspective and being on the ground. We're looking to go into sustainable supply chains, cocoa in Edo State and rice and other crops in northern Nigeria. We're looking at using carbon credits to investors to regenerate land. We're looking at sustainable land management and fertilizer, as I mentioned, and innovative tools around climate finance. Public-private partnership around Lagos waterways, and all of this, as I said, with a view to delivering good investments for the private sector, but investments that also deliver benefit to Nigeria and to the people of Nigeria.
And that was the British High Commissioner to Nigeria, Katrina Lang, during that meeting. We'll take a break now. When we come back from that break, we'll have more stories, especially on the African continent. This is Business Incorporated on Channels Television. You're welcome back. You're still watching Business Incorporated on Channels Television. We'll start off with South Africa, where the food prices continue to soar at the media point. That's according to the latest Household Affordability Index by the Economic Justice and Dignity Group. The group recorded its household food basket at 4,688 rand and 81 cents in June 2022, and the average cost of the basket increased by 78 rand and 92 cents, a 1.7% increase from May 2022. Meanwhile, food inflation was tracked at 7.8%, with 40 of the 44 core food items frequently purchased by lower-income households recording significant increases. Cooking oil increased by 69%, cake flour by 24%, beef was up 18%, and eggs by 14%, among some of the food items. Now let's go to Ghana. In the country, hundreds of Arise Ghana protesters intended to denounce the economic hardship were arrested yesterday. The country has had series of protests from the Fix the Country group and others who have been against the e-levy and others like the hike in the price of fuel. Well, we have joining us to give us updates on the situation, Professor John Gassi. He's joining us from Accra, Ghana. Good afternoon, Prof.
Good afternoon.
So what's the updates? We do know that some protesters were arrested yesterday. Have they been released? Are there more protests today? What's going on?
Well, they've not been released. They are kept in various cells within Accra. I think there are reports indicating that some lawyers are trying to go and see their clients who are arrested and kept overnight. It's like they were not getting the chance to see the authorities, that is the police authorities, and the people who have been arrested. That is the latest that is available now.
So do we have any more protests?
Well, I've not heard of any protest today, but in the media space, there are discussions relating to the high-handedness of the police against protesters, and that is where we are now.
All right, but why are Ghanaians blaming the government so much? We do know, I mean, globally, from COVID-19 pandemic to the war going on in Ukraine, for instance, the price of global oil is up. And so in a lot of countries, even here in Nigeria, we're having issues. So why are Ghanaians, I beg your pardon, blaming the government so much? Do they feel that the government has missed out on some of the things they're supposed to handle or put together?
Well, unfortunately, from the placards and the statement of the leaders of the demonstration, it doesn't seem to be merely about rising fuel prices, rising transport fares, and the rest. But I think it's a package of accumulated issues. Some have to deal with how the economy is being managed. Some has to do with how some expenditures were not in tune with our values. Some have to do with issues of nepotism, youth unemployment. These are the package of issues that they are discussing, but I do not think that it's merely about the recent rise in prices and the rest.
So what do they want?
Well, I think they are venting their anger. They are venting their frustration at the government. And it seems some of the issues are things that are not being addressed. That is why they are on the street to demonstrate, thinking that the government will consider what they are discussing and begin to turn or put in a new kind of orientation towards the issues they are raising. In the past, when these issues are raised, it ended up with what we are seeing today. And it doesn't seem like we are doing anything very clear to to resolve the problems.
So I know that the e-levy also was one, at least the Fix the Country protests. They also talked about the e-levy. It's been months now since it started. What impact has it had on individuals, on businesses and transactions?
Well, transactions have reduced significantly, as reported by the Bank of Ghana. A key figure within the government indicated this week that the e-levy is performing just about 10%. They expected by now to receive about 600 million Ghana cedis. They are just bagging just around 60 million Ghana cedis. That is woefully below expectation. That is how it is performing. So it means that people who find way of avoiding transactions using e-levy are doing that. Businesses are complaining because if you ask your supplier, your customer at another point in the country to bring items, you have to pay the e-levy yourself and pay it for that customer who has to, transport the goods to you. And I think people are still complaining about that. But I think that this current demonstration is not merely about e-levy, but it's broad-based. Some of the issues have been raised in the past. Some have to bother with even our constitution. Some have to deal with how the state takes care of some group of people we call Article 71 in terms of their emolument and what goes to the rest of the people. Recently, there has been an issue relating to that when one former member of Council of State has to refund his ex gratia, believing that those payments are inappropriate. So it's a package of issues that have been happening, emerging. People believe that the presidency has too much power. The police is not independent. All these things are put together. So I do not think that it's just about e-levy. E-levy itself is not performing.
All right. Thank you so much, Professor John Gatsi, economist in Ghana. And we do wish that peace and calm will return to the economy in no distant time.
Exactly.
So let's move on now. The Executive Board of the International Monetary Fund has concluded Article 4 Consultation 1 and the second review of the Extended Credit Facility Arrangement for the Democratic Republic of Congo. The completion of the second review allowed an immediate disbursement equivalent to 152.3 million SDR. That's about $203 million. That's to support balance of payment needs, bringing their aggregate disbursements to date to $653 million. The DRC's macroeconomic environment has improved since the last Article 4 consultation in 2019. The authorities have adopted prudent macroeconomic policies, most visibly by halting central bank financing to the government. Despite the COVID-19 pandemic, considerable macroeconomic gains were achieved in 2021. And still with the IMF now, but in Cameroon, the International Monetary Fund says its staff had reached an agreement with Cameroon on the second review of its loan programs that could lead to the disbursement of $73.6 million if approved by the fund's executive board. The fund said that Cameroon's economic outlook remains positive, with growth of 3.8% expected for this year, 2022, but uncertainties are rising. That's because of sharp increases in prices of oil, fertilizer, foodstuffs, and driven by the war in Ukraine. Egypt and Algeria have signed 12 agreements in the fields of industry, investment, and exports. Algeria Prime Minister said that at a press conference that his Egyptian counterpart Mustafa Madoub, currently on a visit on Algeria. The agreement includes small and micro-sized enterprises, water resources, employment, higher education, and scientific research. Diplomatic training is also included, as well as environment, youth, and sports and endowment in Islamic affairs. Egypt and Algeria have been keen on cementing their relations at the political and economic levels over the past years, as well as coordinating on regional issues, including on Libya, Syria, Palestine, and terrorism in Africa and the Arab world. That's the program for today. We have a final one tomorrow. Join us then. I'm Ini John Mekwa.